Neville, we recently released our Africa Year Ahead Outlook. And what we're finding is that once more, Omicron, or at least the COVID-19 pandemic and its mutations, are becoming a central theme as we consider how economies are going to be playing out during 2022. What concerns me is that vaccination rates across the continent are still quite low. You know, we've got a few countries that have managed to top sort of your 40 to 50%. We've got some of our smaller islands like Mauritius, which seem to have reached herd immunity. But I guess surprisingly, we're at the end of the year and vaccination rates are still hovering anywhere between 20 and 30%. Now, as you're well aware, this could then impact the type of lockdowns or restrictions that these countries could respond to during the course of next year, which is then our first theme that effectively impacts growth. I mean, remember we spoke about this earlier. We're supposed to be entering this period where growth is hovering at over 3 and 4%, supported by infrastructure development, latent fiscal expenditure still coming into the system. And now we're dealing with the fact that because of poor vaccinations, we might still be able to see a lot of this growth, but it's going to be shrouded by these risks that we've mentioned. So how are we looking at it? Well, I guess your primary industry is still an area that is going to be supporting growth. Across most of our economies, we think exports are still going to be a key driver. We are hopeful that we will actually start seeing a ramp up of infrastructure development. Post the events that we saw this year with the discussions around broader ESG considerations, we also think that there will be countries that are starting to focus on having a stronger energy policy. So I'm hoping to see additional projects, especially coming from the Southern African countries, around energy. But how have our governments responded? Well, I mentioned earlier we've seen growth, and now we're dealing with an environment where from a fiscal policy, we're starting to see some form of consolidation. It concerned us, but yes, finally, our governments are starting to consolidate, expected to hover anywhere between 5 to maybe we can say 8% of GDP. What's even more interesting, though, is monetary policy is expected to start normalizing. And for us, that means higher interest rate environments. We've already started seeing 1 or 2 hikes. And it's a bit concerning because, we're still dealing with such severe growth issues and growth risks. Could it be a result of inflation? What's your take on inflation and how that could potentially play out next year?
Well, in the second half is actually quite interesting in the sense that we got inflation starting to spike a little bit higher, and that was predominantly off the back of oil prices that were, of course, relatively high, and a lot of African countries that we deal with are ultimately net oil importers. So that feeds directly into the pump prices. A few governments tried to offer some cushion. Kenya comes to mind. But by and large, inflation started to trend upwards. I mean, if I think of Ghana, for example, inflation is now above the upper end of the inflation target band. Zambia inflation continues to be above the target range. Similarly so in Nigeria. So that is going to be a major theme that we're going to be looking at, predominantly into 2022, simply because oil is expected to remain relatively high due to supply constraints and obviously some of the risks that we're still seeing on the global front. So from that perspective, inflation continues to remain elevated. But a key factor that is also contributing to inflation is, of course, FX rates. I mean, we do know that, FX is always quite a contentious issue when it comes to Africa. But in the second half of 2021, we started to see some weakness. Again, the Ghanaian cedi sort of featured up there in terms of losses, over 4% weakness in the second half of 2021. And that is expected to, continue into 2022, given some of the challenges that they're facing from a domestic perspective. Fortunately, when it comes to economies such as Zambia, the rate of depreciation is going to be fairly low, simply because of the policy tailwinds that we're seeing, coming out of Zambia. In Nigeria, it's going to be touch and go, simply because of the approach that we tend to see from the central bank in terms of trying to control the rate of weakness. But one economy that comes to mind in terms of concerning me when it comes to FX weakness is going to be the Kenyan shilling. As we saw in the second half, I mean, it's just a one-way shot in terms of the shilling weakening against the US dollar. And part of that is, of course, high, the importer bill that we're seeing because of high oil prices. But at the same time, there is some normalization that the central bank is actually doing because of the perennial discussion or perception that the Kenyan shilling is overvalued. So that is something that is going to be corrected into 2022. Again, it's going to have this loop, feedback into monetary policy.
Yeah, I do want to go back to the point around inflation. I guess globally, everyone is concerned about supply chain disruptions. And we saw that already playing out in Africa pretty much through 2020. Do we see an extension of that into next year? Could that also be an added risk? You've mentioned a little bit more about liquidity. I do think you're absolutely right. From the FX side, that is a perennial challenge that we'll have. But supply chain risks, to the extent that you can actually, just add some color around this.
Sure. You started off talking about the variant Omicron, right? And that is a major risk. I mean, if anything, in terms of the previous variants that we saw, if that's anything to go by, then I think that adds some risk in terms of, lockdowns and supply chain restrictions. And that did affect earlier on in 2020 when we saw those lockdowns affecting inflation. So again, that is a risk that we've baked into some of our assumptions and sort of base case scenarios. And then on your second point around liquidity, I think that is ultimately going to be much better in 2022, given the combination of export revenues that is starting to pick up, and also the IMF SDR allocations. Again, countries such as Zambia effectively double their FX reserves. We saw sizable $4 billion going into Nigeria, similarly so, in your Egypts, etc. So that is ultimately going to improve FX liquidity. But to what degree that is going to be deployed in terms of trying to counter some of the volatility, the weakness that we're seeing in the spot market, that depends on a central bank level. Again, in Nigeria, we thought that, after the Eurobond issuance, after the SDR allocations, that would see the backlog in terms of demand for dollars being cleared, but that hasn't necessarily materialized. So that, again, that's going to be an idiosyncratic risk that we're going to be looking at in 2022.